Hello everyone, welcome to the Financial Information Channel. In this video, I am going to mention some of the top 10 stocks during a recession. The following 10 stocks have proven to do well during a stock market crash. I will mention some of the fundamentals, but keep in mind that investing during a stock market recession can become challenging because you cannot rely just on the fundamentals such as the price to earning. You also have to look at trends that have worked in the past. And one thing for sure, I am actually going to show you actual numbers of some of the companies and how the companies have performed during a stock market recession. But really quick, before we start the video, my name is Marvin. I do videos about the stock market, personal finance, and how to make money. So if you're interested, you can click on the subscribe and the notification bell. And also you can leave in the comment sections which company did you like the best from this video. But now let's start with the video about the 10 recession proof stocks. And the number one stock that has done really well during a stock market recession is going to be Ross Stores. And the stock symbol is ROST. And Ross Store is an apparel and a domestic play in the stock market. And Ross Stores have done an amazing job during a stock market recession, and one of the main reasons, their apparel sell at a reduced price. And you will see during the screen, during the recession from 2000 to 2002, Ross went up over 79%. And during the bear market that we had from 2007 to 2009, the company returned to investors around 10%. And during the correction that we had in 2011, the Ross Store went up over 4%. And just to give an idea how Ross Stores have done during a stock market recession, in the main year, which was in 2008, Ross Store went up over 17%. It outperformed the S&P 500 by around 56%. It is a good stock since a lot of people will want to cut costs for apparel during a stock market recession. But really quick, let's take a look at the price to earning. And at this moment, the price to earning is around 22, and it has a forward price to earning around 17. And in the balance sheet, it has around 129 billion in cash and around 396 million in debt. And I'm surprised by the balance sheet since this company is a retail and it has a clean balance sheet. And now let's take a look at the number 2 company during a stock market recession, and that is going to be Southern Company. And Southern Company is a utility company that provides power to more than 4.4 million customers. And the company operates mostly in the US South part of the United States. And Southern Company has done a really good job during a stock market recession. During the recession from 2000 to 2002, the company went up over 137% during those years. However, during the recession in 2011, the company went up over 8%. Now keep in mind that Southern Company pays a really good dividend, and that dividend is actually nice to have during a stock market recession. Now in terms of valuation, the company has a price to earning at this moment around 54, and the forward price to earning is around 15. Now in terms of the balance sheet, it has a bad balance sheet. It has around 2 billion in cash and it has around 50 billion in debt. Even during a stock market recession, people will need power services. And now for the number 3 stock, it's a company that makes sense during a stock market recession, and that company is gonna be Dollar Tree. And Dollar Tree makes a lot of sense during a stock market recession. A lot of people will want to buy items at a dollar price. Now Dollar Tree went up over 60% in 2008. It outperformed the S&P 500 by over 99%, and the forward price to earning is around $15. In terms of its balance sheet, it has around 1.1 billion in cash and it has around 5.6 billion in debt. So the balance sheet might look bad, but I think during a stock market recession, their business will do great since it sells a lot of the items at a discounted price. And now for the number 4 company, it's a company that I wasn't very familiar. However, it did really well during the stock market crash from 2007 through 2009. And that company is Anheuser-Busch, and that company produces a lot of the cheap beer that is sold in the United States. And one of their products is, for example, Budweiser. The company returned in 2008 went over 39%, but now let's take a look really quick at some of the fundamentals for this company. And as you see in the screen, the price to earning at this moment is around 25 and the forward price to earning is around 17. Now in terms of its balance sheet, it has around 11 billions in cash, but it has 117 billions in debt. And it has a ton of debt. However, it sells a lot of the cheapest beers in the United States. So some of those margins should be really good. But now let's take a look at the number 5 stock during a stock market recession. And that company is going to be Walmart. And Walmart is a very known retail in the United States. And one of the main reasons is that it sells a lot of the items at a really low price. Walmart performance during the bear market from 2000 to 2002, the share price moved down around 4%. However, during the most recent bear market from 2007 to 2009, Walmart went up over 7%. And during the latest correction in 2011, Walmart moved down over 4%. Now, one key number that you have to pay attention, in 2008, when the stock market was tough, Walmart went over 20%. It outperformed the S&P 500 by 58%. In terms of the valuation at this moment, it has a price to earning around 26 and the forward price to earning around 16. And it has a balance sheet around 6 billions in cash and around 46 billions in debt. And most likely, Walmart will do fine during a stock market recession. But now let's go to the number 6 stock, and that is Consolidated Edison. And that is another utility company that has done really well during tough times. Consolidated Edison provides a lot of the electric and gas services around New York. And one important fact is that this company is regulated along with Southern Company that I mentioned earlier. Now the company did really well during the bear market from 2000 to 2002. The company share price went over 61%. However, in the most recent bear market from 2007 to 2009, the company moved down over 25%. But in the latest correction that we had in 2011, the company moved up over 10%. And this is another utility company that has a really good dividend. But now let's take a look at the valuation. And as you can see, it has a price to earning at this moment around 15 and the forward price to earning around 17. Now in the balance sheet, it has around 797 millions in cash and around 16 billions in debt. So it has a lot of debt, but I wouldn't worry since a utility company is always needed during a stock market recession. And now for the number 7 stock, it's gonna be Amgen. Now Amgen is a biotech giant company that produces a lot of drugs that are related to cancer. And even if money is tight during a recession, you will still need medicine. And the company did really well during the latest stock market crash. In 2008, the return was around 24%. It outperformed the S&P 500 by 62%. Now in terms of the valuation at this moment, it has a price to earning at this moment around 64 and the forward price to earning around 12. So it is nice to see a biotech company with a positive balance sheet. So this company should do fine during a stock market recession. But now let's go to number 8 stock, and that is going to be Abbott Laboratories. Now this is another company that is in the healthcare space. It does a lot of medical devices and nutritional formulas for patients. In the latest bear market from 2007 to 2009, the company moved down around 11%. And in the 2011 correction, the company moved down over 2%. Even if it didn't do really well during the latest bear market, it has a good dividend, so keep that in mind. In terms of valuation, the company has a price to earning at this moment around 218 and the forward price to earning is around 18. And in the balance sheet, it has around 9 billions in cash and around 27 billions in debt. But now let's go to the number 9 stock, and this company wasn't around during the latest stock market crash. And that company is gonna be Dollar General. The company went IPO on November 13 of 2009. The company share price when it went IPO was around $21. Now for Dollar General, I don't have any returns during a bear market. However, the business should do just as fine as Dollar Tree. Dollar General is another retailer that sells a lot of the items at a dollar price. Now in terms of the valuation at this moment, it has a price to earning around 17 and the forward price to earning around 14. And in the balance sheet, it has around 267 million in cash and around 3 billion in debt. And these retailers should do fine during a recession. But now let's go to number 10 stock, and that is stock that I actually own shares, and that company is going to be Constellation Brands. And Constellation Brands actually had a negative return during the latest bear market. From 2008 to 2009, the company moved down over 17%. However, now the company should do better. It has more products under its portfolio. In addition, the management team is way better from what it was in 2008. And Constellation Brand's main business is to sell beers, wines, and liquor. But now let's take a look at the valuation. And as you can see at this moment, it has a price to earning around 19 and the forward price to earning around 20. And in terms of its balance sheet, it has around 90 million in cash and around 10 billion in debt. However, it has a really good cash flow and the margins in alcohol are really good. I see these stocks as some of the top 10 best stocks during a stock market crash. Now, one important question that I'm going to answer is how these stocks would compare to a commodity. And I'm talking about a commodity such as gold during a stock market crash. Now I'm going to show you the performance for gold during a bear market. And as you see in the screen, during the latest recession from 2007 to 2009, the gold price went up over 24% and the S&P 500 moved down over 37%. So that is just one example, but let me show you the recession that happened in 2001. And during the 2001 recession, gold went up over 4% and the S&P 500 moved down over 15% in 2001. So to answer the question, gold has shown in the past that it has done really well during a stock market recession. And these are going to be the top 10 recession proof stocks. And that is going to be everything for this video. Please leave in the comment sections which company did you like the most. And for me, the most surprising company was Ross Stores. It has done really well during recessions. And remember, you can share this video and give it a like if you find the video helpful. And I'm going to leave this video if you want to prepare for a stock market crash. And you can see another video here from this channel. And remember, you can subscribe if you want to receive videos about the stock market, personal finance, and how to make money online. I am going to thank you once again for watching the video. Have an excellent day and take care, my friends.